Hey, good morning, everybody. Excuse me. Good morning. Good morning, Joel. Good to see you this morning. I'm a minute early. It happens. Hey, Alex. Good to see you. Um, I'll give it just a second for those people that like to show up last minute. No worries at all. Hope you guys are doing well today. Exercising patience this morning, right? Um, Not a whole lot going on from where I was sitting. S&P seems to be stuck just a little bit. Crude oil got caught in a range and had a beautiful breakout. And then once it did, there was that opportunity perhaps for the breakout. But it's been pretty mellow today. And that's okay, it happens. Some days it's going to be nonstop excitement. Some days it's going to be patient. And as long as you let everything revolve around, whether or not your rules are met, things tend to work out. So, guys, my name is Mark Novak. Welcome to the Education Room. Welcome to Nexgen if you're brand new. I know that we get new people in here all the time. We've got people on demos. We've got people that are coming back. Sometimes people take a break from trading, have to take care of life, and then they come back in and they're trying to refocus. Guys, this class is designed for you. This class is very much designed around building a foundation, recognizing advantages. Hey, good morning, Dee. And then putting those advantages into play. So without further ado, let's get this day going. I'm excited about the day. It's going to be a good day. Hey, good morning, Jason, Gary. Guys, we're going to focus on a couple different things today. We're going to focus on the absolute best of the best. We're going to focus on the highest probability trend trade that I know how to teach. We're also going to focus on your charts. We're going to look at what you're doing. Whether you are studying through market replay and bringing those pictures into the room, if you're taking trades live and you want feedback, that's what this class is designed for. We're going to discuss the rules a little bit in the morning, and then we're going to look at what you're doing. We're going to watch the live market and see how the rules play out in the live market. This is not a room where we call trades. This is not a room where we tell you when you should buy or when you should sell. It's focused 100% on rules and reading indicators, and that's exactly what we're going to do. So every morning when I wake up, I check the news, guys. Excuse me just one second. Sorry, I'm trying to make sure that my YouTube recording is up. John Novak just sent me a message and said that it wasn't. I'm going to make sure I'm not missing something this morning. And now I'm taking silly pictures of things. All right, here we go. Guys, let's start with the news. Every morning I look at news. Every morning I wake up and I look at news, and I'm not concerned so much about what the news is. I don't go, oh my gosh, it's existing home sales. This is going to create an impact that tells me that I should go long or that I should go short. What I'm looking at is that there's something happening in the world that can create an unstable environment for trading. So this morning at 10:30 a.m., we're going to have crude oil inventories. If you're a crude oil trader, this is potentially very high impact news. This is news that somebody may react to. And when they react, it may create a large spike. It might take you out of a position. It might push your position in the right direction. But it becomes a little bit of a risk. It becomes difficult to trade. Sometimes just the speed alone becomes a little problematic. So set a note, 10:30 a.m. We'll make sure that nobody that's trading crude is trading into crude oil inventories. That's on you. You got to do this every morning. I put the link in the room. And then at 2 o'clock today, guys, you can see that there's an awful lot of FOMC business going on. And this is high impact. And again, I'm not trading what they say. But the reality is that when everybody in the trading world knows that there's a giant FOMC release going on at 2 p.m., sometimes the market sits a little still. This may be one of those patience days for you, or it may flow completely normal. But be aware. But at 2 o'clock, you want to be on the sidelines, probably eating a sandwich, watching the fireworks, and it's a good time. So I do that every morning. Every morning I go in and I like to make sure that I know when the news is. And then I'm going to come to the education page, guys, and I'm going to show you a couple things. Next-gen education page is where I get anything and everything that I talk about. There are zero secrets between me and you. Everything is out there, available. I don't talk about concepts that you can't back up on the page or go study in your free time. And everything that I talk about really comes from the education page. And when you click on that education, the tutorial section, it reminds you that you're building a foundation. If you look at the very top in the URL, new client syllabus, building a foundation, creating that solid platform from which to grow. That's exactly what we're going to do today, is we're going to begin working on that platform, and we're going to do it with what we call a high probability trend trade. And this is going to be the first thing that we look at. And a high probability trade is defined when each indicator on every chart lines up for the trade, guys. The strongest triggers, nothing in the way, no trouble spots between your entry. Hey, good morning, Abdulaziz. Nice to see you. Long time no see. Mohammed, good to see you. Guys, this high probability trade is going to be the focus. Good morning, Thala. Nice to have you back. And if you focus on this high probability trend trade, guys, give it 20 trading days as a brand new user or somebody on demo. Allow it to be simple. Remind yourself that you're new and it's okay to be new. It's going to give you the most valuable skill set that you can ever have as a trader. You're going to become a chart reader. Focusing on this high probability trend trade for your first 20 days, couple weeks, is going to have you opening up your charts, looking at your indicators, and understanding three essential elements: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. We're going to use two of these for entries, where the market is likely to continue, and we're also going to recognize where the market is likely to stop when that trend may be ending. And you're going to understand where the market is likely to go, and this is going to allow you to make educated decisions on profit targets. So we're going to focus on high probability. We're going to learn to read our charts, guys, and you're going to allow it to be simple. That's the one plea that I have with you in the beginning, is just let it be easy, because 90% of what we do is reading our charts and 10% of what we do is trading. And we're taking that trade as a brand new user when this simple equation has been met. A trade equals momentum, clear path, and an entry area. And when those three come together, you have a high probability trend trade. Each rule for the high probability trend trade: strong trigger lines, no termination conditions, and then recognizing your entry. Three rules give you the equation, and those three rules are going to happen on two charts. And I know that you're going to see other charts. You're going to see people using range charts. You're going to see people using higher time frames. You're going to see people doing a lot of different things. And this is where I kind of implore you, let it be simple. Everything that you learn on these two charts will translate to other charts. The trigger reading that you do, the termination conditions that you understand, everything, the patterns are going to go to any time frame, any market. So we teach on this 13.2, we teach with the 5.1 to keep you focused and simple, and this is where the most opportunities tend to present themselves. Your 13.2 chart is like a broad stroke of a brush, and it's going to give you that overall feeling of what the market's doing. With only one bar on the 13.2, you're going to use the most current bar. You'll be able to understand the trend of the market. If the background on that 13.2 is green, you're in an uptrend. And if you're in an uptrend, you should only be looking for rules to be met for high probability trend trades long. If we're in a downtrend, that background is red, and you should only be looking for rules to be met for high probability trend trades short. Hey, Kulu, I don't trade the NASDAQ. To me, the NASDAQ is like a Tasmanian devil hopped up on Red Bull. I know that there are people that trade the NASDAQ in here, and they tend to use higher time frames in order to slow down that process a little bit. You are welcome to go to the traders chat side, maybe ask a question or two. But I can tell you that the rules are the same for the NASDAQ. The patterns are the same. So one thing that you can do, yeah, absolutely. If you're brand new to the software, focus on the patterns that I teach on the S&P. Focus on the patterns that I teach on crude oil, and know that you're going to be able to translate them over to those other time frames, to those other markets. It's the exact same patterns, exact same indicators. You'll just be on a different market. So let me know if I can help. You can always reach out to your salesman, and they probably have a little inside scoop on that as well via John Novak or Traders Chat. I know there's people that trade NASDAQ as well, but the one common thread is that they all trade the patterns. They all read the indicators, and that tends to be the most important thing. Welcome to the class. So on the 13.2, most current bar is also going to give you rule number 1, strong trigger lines. It'll give you rule number 2, and rules 1 and 2 must be met. Strong triggers, no termination conditions. And then once these rules are met on a 13.2, once we have those advantages in place, you're going to turn your attention to the 5-1 chart. And this is your entry chart. Notice that I bolded out the word entry. Here you're going to refine that broad stroke of the brush provided by the 13.2, and you're going to pinpoint your area of entry where the market is likely to continue. You do this via rule number 3, using a limit order to buy or sell a pullback to an area inside of favorable large triggers. By using this smaller, faster chart, it's going to allow us to reduce risk. It's going to allow us to maximize our profit potential. Abdul Aziz, is that NinjaTrader 8? So on NinjaTrader 8, there isn't a reversal bar marker just yet. John Novak is working with programmers to have a standalone indicator built. So right now, it's not an option, I'm afraid. But the programming is in place to get that done. Sorry, that wasn't super helpful. And look what you did. You just got Thala. What's a reversal bar? Thala, reversal bar is just a bar that goes the opposite direction. If everything is going down, if the next bar goes up, it's a reversal bar. It indicates a short-term reversal in the market. Maybe it indicates a long-term reversal, but it's just a bar going the other direction. When all the bars are red, a green bar would be considered reversal bar. When all of these bars are green, if this bar becomes a down bar, well, then you have a reversal bar. And what Abdul Aziz is referencing is this little white line right here. This little white line on your 13.2, and it's this gold line on your 5-1. It just shows you the price where this bar becomes a formed reversal bar. Good question. Awesome. No worries. So guys, 2 charts, 3 rules, 3 very distinct advantages. I'm going to go through each of the rules right now, guys. We're just going to break them down. If you'll go to the top around 8 a.m., I'm sorry, maybe like 8:54 is what the time was. I gave you guys 4 different files. I gave you a high probability trend trade checklist. And that is going to be exactly what we talk about. These rules that we're about to discuss, I've put them on a checklist so that you can police yourself a little bit. I'm also giving you a high probability trend trade checklist that has pictures of everything that we're about to talk about. I've given you my personal spreadsheet with over 120 pictures of high probability trend trades, so that everything that we talk about you can go through and study. And then I've also given you an example plan. How to be able to take the information that you're getting today and turn it into your beginner plan. Guys, you can take these pictures, you can drag them, you can drop them onto your computer, you can download them. But I would encourage you, take advantage, take these, because these are tools that you can use to get you exactly where you want to be. So let's go through the rules. We're going to break them down. I'm going to try and keep it as simple as I possibly can, guys. Engineers, don't overthink it. It's always my engineers, I'm telling you. Guys, rule number one, the first part of the recipe says that we must have momentum. To look for a trade, there has to be momentum. Momentum comes from strong trigger lines, and they're pretty easy to recognize. In an uptrend, when your background is green, strong trigger lines means that your small trigger lines have broken above the large trigger lines. The large trigger lines are wide, they're angled in the direction of the trend, and it's that space created between the two that lets you know that the odds are favorable for the market to continue up. Guys, you're going to hear me refer to this as odds favorable momentum. When we're talking in class, you may see the acronym OFM, odds favorable momentum. This means that you're going into the trade with the advantage of momentum. In a downtrend, those small triggers will break below the large. The large are wide, they're angled in the direction of the trend. That space created between the two lets you know that the odds are favorable for the market to continue down. That advantage continues all the way until the small return to and work their way inside of the large triggers. When this happens, we call it a weakening of the large triggers. And when you have those weakened large triggers, anything can happen up or down. So one look gives a very decided advantage. The other look takes that advantage away and makes it more of a crapshoot. So what you're going to do in an uptrend, you're going to wait for those smalls to separate. You're going to wait for that space to be created. Think of it like scissors. When your scissors are open, you're ready to get to work. When those scissors close, it's time to, well, you can't get any work done, right? We're going to look for opportunities when we have that strongest trigger look, when momentum is at its strongest. And you'll see these little circles on tails. This is a 13-2 chart. I'm going to teach you how to scroll back, how to study historically. Each of these circles are potential entries on that 5-1 entry chart. And you'll notice that they happen during that odds favorable momentum. Anytime I see a tail, I know that there was a potential entry. And it'll be up to me to go back and determine whether or not it was by the rules. We'll find out as we get into it. So guys, do me a favor, give me a why in the room, especially if you're brand new. Rule number one says strong triggers. Strong triggers give the advantage of momentum. Here's your look, whether it's an uptrend or whether it's a downtrend. Awesome. Guys, if you let every trade you take begin with that odds favorable momentum, you're going to be amazed at how often the market pushes in the direction. The second half of the equation, or the second third, I suppose, says that termination conditions false, that there's room to profit targets. This gives you the advantage of a clear path. And what this is telling you is don't trade into a termination condition. Don't trade into an area where the market is likely to reverse or likely to stop. I like the writing, but I like pictures more. I think these sink in. What are your areas, guys? Areas that may reverse the market. May, not definitely will. Divergence high. This magenta line letting me know that there was a pivot and a loss of momentum. It can be red resistance. It can be blue support. These yellow 1-to-1 dots. It could also be a divergence low. These divergences let me know that price creates a pivot and momentum doesn't follow. We're losing momentum in the market. So we'll also keep eyes on these divergence lows. It can also be a mid-band when those large triggers refuse to follow along with the party. And recognizing these really becomes a simple two-part process. Two things happen to identify a termination condition. The first is that price reaches an area, meaning these price bars are trending down, the market is down, everything is red, my triggers are red, and price comes in go to the fib PowerPoint again. The picture that I just put in the class. That one right there, and I also posted that in the room for you, Thala. Was there a question about it? Or did you just want to soak it in for a minute? Did you get it? Are we good? Awesome. Cool. And I post all of these pictures, guys. I post them in the room. If you ever want to steal something from the room, hopefully you can all see this. I can right click. I can save the image. You can put it right onto your computer if you want. You can also click on the image and it'll come up on your screen. And then once it comes up on your screen, you can open it in the browser if you want, and that'll get you squared away as well. So everything that gets put into this chat room is available for you guys to steal. I actually encourage you to steal it over and over and over, reinforce those lessons. Two-part process to recognizing a termination condition. After price reaches any Fibonacci support, in this example, check the trigger lines. If they're not below the support, don't take any more trend trade shorts on the small chart. How easy is that? Price reaches an area, where are the trigger lines? If they don't break, well, then we're not looking for a short, right? On the example of the areas, we saw the exact same thing. Price reaches these 1-to-1s. The price bars come in contact. The trigger lines don't break. This is a termination condition. This is an area that may reverse the market. When we talk about price reaching an area, we're just looking for the bars to get down there and get in contact, or a tick or two. Price reaches an area here, resistance, all the trigger lines remain below. No short trades, or no long trades, excuse me. Price reaches support. Absolutely no trigger lines break through. We're not looking for shorts. Guys, 90% of what you do during the day is going to be waiting for those advantages, waiting for that advantage of momentum, waiting for that advantage of a clear path. Price pulls back up to resistance, a divergence high, another resistance. All of the trigger lines remain below. I know that I'm not going long because it may reverse the market. Guys, this is what we call a pivot stop out of a divergence high. This pivot has divergence, meaning that there was a loss of momentum right at that price. The market trades above and then back below. Don't take any long trades. This is a divergence stop out, a pivot stop out of a divergence high. When it happens at Fibonacci resistance or support, it becomes even more powerful. Guys, this termination condition ultimately creates a full reversal in the market, provides us odds favorable momentum. This is what you're going to hear referred to as a strong top. So a strong top or bottom is nothing more than a termination condition that creates a full reversal. I'm going to type that in the room for you. You're going to see strong tops. You're also going to see strong bottoms. This pivot creates divergence. I know that there's a loss of momentum in the market because of this negative number, because of this cyan divergence. This on its own is not a termination condition, right? Because price exceeds the area. The trigger lines begin to exceed the area. This is nothing more than a fluctuation in price. It goes down, it goes up. It's when price reaches the divergence low again. When those trigger lines don't break, now I have a termination condition. This is what we call a strong bottom. Termination condition creates a full reversal. Strong bottom. Termination condition creates a full reversal. Strong top. Everybody comfortable with that? Because that's the premise. That's the precursor. Focusing on those 5-1 trend trades that happen after a termination condition on the 13-2. Guys, that's your best chance of success as a brand new user. That's your highest probability trend trade that we know how to teach. Even with odds favorable momentum, price reaches this area of support. When it reaches the area of support, you go through that simple process, right? Where are my trigger lines? Well, my trigger lines all remain above support. This is an area likely to stop the market. Sure enough, it does. It creates a bounce, gives us a full reversal, gives us odds favorable momentum. And then there's one of those tails. Once again, guys, there's your potential entry for the highest probability trend trade we have. That 5-1 trend trade that comes after a termination condition on the 13-2. So do me a favor, give me a Y in the room if you're with me. How do you like that? Price reaches an area of resistance. Just happened in the market, right? This is the S&P. None of the trigger lines break through. And guys, look at the reaction. No long trades there. And you can scroll back and you begin to recognize these an awful lot. Price reaches resistance once again. Absolutely no trigger lines go through. Look at the push. All you're doing with rule number 2 is you're reminding yourself that you need the advantage of a clear path. Do you see it, guys? Price pulls back to support. Absolutely no trigger lines break through. And the market works its way up. There it is again. From resistance to support, from fib to fib. Your job is going to be to look for the opportunities that fall in between these termination conditions. All the way back to resistance. There's one of those divergent stop outs. This is NinjaTrader 7D, but the indicators and everything are exactly the same. The code written for 7 is the exact same code written for 8. Are you on 7 or 8? You're on 8. Okay, so every morning, I want to go through this too. And guys, let me know if you're doing this. This is your morning routine, daily computer preparation for high performance. Are you going through? Are you cleaning out the cache, the tick? Okay. Another thing, and I'm not sure that it's on 8 as well. I believe it is. You can repair and reset the data. And then also D is you may not be running synthetics on 8, right? You might be pulling over from 21. Everything Thala is right here on the education page. So that's one reason that we're going to look very different, D, is because I am. Because this is 7, I've got 5-1, I've got 21-3, I've got all sorts of fibs on here. And that may have a lot to do with why we look different. And Thala, there was your link right there. You're very welcome. All right, guys. So do me a favor. Give me a Y if you're with me. Termination conditions. Price reaches an area. Triggers don't break through. D. Great question. I like to know where they are. So what I do is when I trade, I have a 13-2 and I have a 5-1. My 13-2 shows my 5-1 fibs, but the reality is I can just look right and see my 5-1 fibs. My 13-2 is going to have its native fibs. So what I do in the morning, D, and I don't have 8 up, is I will literally take 21. I'll take a 21 chart. Whoops, let me see if I can find. So for example, here is a 21.3 for the S&P. I'll squish it down. And I'll do that. I'll draw lines where the native fibs are. And then what happens, if you do that, see how they come in onto the 13-2? Does that make sense, D? It's a real simple process. It takes about 3 seconds, maybe more than that. But now I know exactly where my 21 resistance is and where my 21 support is as well. Does that help a little bit? And guys, not really. Do you have a 21 chart? D, do you have the 21 chart in 8? You do, right? All you're doing is drawing a line where there's a line. and it'll transpose over so that you can see it on your other time frames. It's just you're creating synthetics. But yeah, Jason will get you taken care of if you... Awesome. So go to your drawing tools, take a horizontal line, and just put it on the chart. If price is trading up to that line, it's resistance. If price is trading down, it's support. But put the line over the line. That's a lot of lines, right? I'm saying line a lot. On your 21 chart, if you have resistance, that's your area to draw right there. See how it just showed up on my 13.2? See how it just showed up on my 5.1? That's all a synthetic fib is it's from a different time frame. Cool. Yeah, give it a try. And then if you need help, of course, tech is here for you guys. Don't ever be shy about using tech. Because the reality is he's 1,000 times smarter than I'll ever hope to be when it comes to this stuff. So I always encourage you guys to go to tech. Sorry for the interruption, but guys, here we go. Terminations, the advantage of a clear path. And let's talk about the process of getting a clear path. Using my 13.2 chart. So Thala, if you accidentally close a window, there's two different ways to do it. You can just close your workspace and don't save. So close out the workspace when it asks you to save, say no. And then when you reopen it, it'll be right there for you. And then the other way is you can build a new chart. And this might be a fun little exercise for you. That'll teach you how to build a chart. So guys, those strong triggers that we talked about, the advantage of momentum, recognizing a clear path, right? Making sure that there's nothing in the way, nothing between you, your target. So here's that process. Price reaches resistance. Absolutely no trigger lines break through, guys. No long trades. We're in a holding pattern. Small trigger lines break through the area. Large triggers do not. These areas have the potential to break, but they're not broken yet. And then as market moves up, when both the small and the large triggers exceed an area, whether it's up or down, we consider the area to be fully broken. We now have the advantage of a clear path. So there's three potential options, guys. Price reaches resistance, no trigger lines through, no trading into the area, it may reverse the market. Small trigger lines break through with odds favorable momentum. The area has the potential to break, but it hasn't been broken yet, which means that we don't have the advantage of a clear path. When both small and large get to the other side of those Fibonacci areas, we now consider the path to be clear. You guys give me a Y in the room if you're with me. And then there's that termination condition that creates a full reversal. It's giving us odds favorable momentum, but we just have to get through this area of support, right? Sometimes the market turns from nowhere. Sometimes we see a low, a pivot low, and it doesn't reach Fibonacci support. Sometimes even with odds favorable momentum, that market appears to turn from nowhere. It hasn't hit a key area. We're going to talk about one more termination condition that you'll see on a smaller, faster chart that's going to help you recognize this and be able to identify it. And that's using those divergences, those losses of momentum. Three divergences in the same price range may terminate the trend. Guys, your divergence is true when the negative number prints, when you get a cyan line from a low, a magenta line from a high. All divergence means is that there was a loss of momentum. There was a moment where price creates a pivot, it goes up and down. And then when that pivot forms, there we go, I've got a picture of it. When that pivot forms, this white arrow represents momentum. Momentum doesn't follow. You're losing momentum in the market when these divergences print. When 3 of them print, it may terminate the trend. It may push it up higher. It may push it down lower. It becomes even more powerful when those trigger lines work their way inside of the large trigger. We go from odds favorable to anything can happen, and we have 3 losses. If you look at the 3 losses of momentum from a low or from a high, you'll see this in situations like this on the 13-2. When that market is losing momentum, you can't see it on a bigger broad stroke of a brush, so that 5-1 will help you out, guys. You're also going to be able to use that momentum to help you manage trades as you move beyond that high probability trend trade. But the one we're looking for right now, strong triggers, right? Clear path. And there's one of those tails, one of those potential entries. So let's figure out how to enter the market, guys. When the rules are met on the 13-2, this is what your 5-1 is going to look like. If we're in an uptrend, your background's going to be green. Your price bars are going to be green. Your large triggers should be green, trending one on top of the other. And you're just going to focus your attention on those trigger lines in the areas that may fall within them. Because rule number 3 on that 5-1 chart says that we're going to use a limit order, meaning that we're going to let the market come back to us and we're going to buy or sell a pullback. And guys, a pullback is just a small retracement in price counter to the underlying trend. And we're going to do it at an area inside a favorable large trigger. So the 13-2, who are you trading with or against? The 13-2, your large chart, this is the big crowd. It gives us momentum. It gives us no termination conditions. We're going to let the small crowd force a pullback. We're going to let the small crowd give us this small retracement counter to the underlying trend. And rule number 3 says that when we get that pullback, we will buy or sell at an area inside of favorable large triggers. Your pullback begins with a reversal bar. So Thala, here's that termination again, right? Everything is going up. All these bars are green. You're going to wait for a red bar. If all the bars are going down in a downtrend, you're going to wait for a green bar. You're going to wait, Ron, for this signal that the pushback may be happening. And this is where you guys are going to create a window of opportunity. And a window of opportunity is the area where the market is likely to continue. Remember we said your chart reading will let you know where the market is likely to stop. That's those termination conditions. And now we're going to identify where the market is likely to continue, and that's your best spot for an entry. Areas that fall within these large triggers, fibs, mid-bands, or one-to-ones. It can be just a fib. It could be just a one-to-one. It could be just a mid-band, or any combination of the 3. The idea is that we want these areas to be inside a favorable large trigger. So when that reversal bar prints, I'm going to look at my large triggers top to bottom, and I'm going to see the areas that may fall within them. And I'm going to right click on my chart and I'm going to activate a limit order. I'm going to wait for the market to come back to me. So right at the top of this window, 79.20, 79.21, there's a limit order waiting to see if that little pushback, that pullback, the retracement counter to the underlying trend gets to my window of opportunity. And if it does, I'm in a long position. Take a picture of the picture real quick. I'm in a long position with the advantage of momentum. I'm in a long position with the advantage of a clear path. And now I'm in a long position with the advantage of an entry. Guys, we have the recipe for a trade. Momentum, clear path, and an entry area. I like to make this picture to help you guys understand the window of opportunity. If you draw a box from the top of your triggers to the bottom of your triggers, you've identified where the areas need to be. But if you draw a second box from your highest point of support to your lowest point of support, this becomes the area where the market is likely to continue. Does that make sense, guys? Wait for the reversal bar. Once the reversal bar prints, create your window of opportunity. Your limit order goes at the top of that window, above the highest point of support. And guys, I'll take this trade 1,000 out of 1,000 times, because with all of those advantages in place, 70 to 80% of the time, typically on a high probability trend trade, this is my result, profit target reached. Because I wait for the pullback, my profit potential is increased. Because I wait for the pullback from the area, I can reduce my risk drastically. And guys, this is my focus for the first 30 days. I say 30 days, it's only 20 trading days. It's not a very long time. Your goal for the first couple weeks while you're doing this with the software, guys, is nothing more than identifying entries. Because great entries create effortless management is what I've found. So when you put the two charts together, here's those circles again. Well, it's a square. When I have odds favorable momentum, small's above the large are wide, they're angled in the direction of the trend. I have not reached a key area, therefore I have the advantage of a clear path. If I see a tail, I'm going to circle it. And if that tail lines up with an area of support inside of favorable large triggers, guys, I know that I have a rules-based trend trade. This is how you're going to go through and study and become comfortable with the look. You can open up your charts. And when you have that odds favorable momentum, let's see how this one looked. And I circle a tail and I put the two together. You can see that price pulls right back to support inside of favorable large triggers. Guys, take a picture of that and begin to burn it into memory. And if you do this drill, what you're going to find is that the market doesn't have odds favorable momentum every second of every day. The market doesn't give trading opportunities every second of every day. But if you're patient and you wait for the rules to be met and you wait for the best of the best and you give yourself that highest chance of success, well, then you can put yourself on the right side of the market more often than not. And that's how trading plans are built, guys. Trading plans aren't built on the excitement of always being in the market. Trading plans are built on patiently waiting for the advantages, waiting for that market to come back to the area of resistance inside of favorable large triggers when the rules are met, and then trusting the look enough to never miss a winner, and trusting the look enough to know when it's time to avoid a rules not met. Guys, is everybody comfortable with this? Give me 20 days of finding entries, right? Give me 20 days of recognizing odds favorable momentum, 20 days of recognizing a clear path, and guys, 20 days of recognizing a pullback to an area of resistance inside of favorable large triggers. This was at 9:30 this morning, guys. This just happened. Abdul Aziz, if you go to the traders chat room, let me see if I can find exactly where it is and get you a link. John Novak has gone through really great lengths to help with this little challenge that's going on. Here we go. And guys, this is for everybody. Let me pull this up. He's dedicated a section to the Ninja 8 setup right there. Go through that, take a look. It's done an awful lot to help out. Is everybody comfortable with this look right here? Guys, this is your study process. I'm going to bring up my capture software. Whoop, not my Excel. Guys, when you go back and you study this look, and you find one of these circles, right? You find this tail, you have the rules met. I want you to use your capture software. And I want you to take a picture of the chart, guys. Click and drag left to right, top to bottom. And create a picture. Is everybody comfortable taking pictures? Guys, we have arrows that you can use. There's shapes that you can use. Look at this, top of the triggers to the bottom of the triggers. And then I can wind that down a little bit to create my window of opportunity if I want. But the most important thing is this call out button. Write your rules on your chart. Strong triggers, yes. Clear path, yes. Area inside of large triggers, yes. What I've done is I've just policed myself. I'm making sure that it's a rules-based trade. If it is a rules-based trade, guys, I know that I have my best of the best look. I'm going to do two things. I'm going to upload it. And when I upload it, it's going to give me a link to screencast. So I'm going to post it in the room. And I'm going to wait for feedback. I'm going to say, hey, Mark, I took this picture. I'm pretty sure it's a high probability trend trade. Can you double check my work and make sure? And then the next thing I do is I'm going to go to my spreadsheet. And under my Nexgen favorite looks, I'm going to paste it in here. And I'm going to call it perfect high probability trend trade short. And now I can go back and study this one over and over. Guys, this is your study tool. Learn the looks so it becomes easy. Burn them into your mind. Take 1,000,000 pictures and share every one of those pictures with me in class. Is everybody comfortable with this? We're going to have the strong silent types today, right? That's cool. I'm going to do my thing. All right, guys, so that's the first part of class. Price reaches support, absolutely no trigger lines break through. Gary, if you're in a trade, you don't have to stop to tell me you're in a trade. It's okay. Termination conditions creating a full reversal. Small triggers are beginning to break above the large, but we got to work our way through that area of resistance, right? If I go back to the S&P, smalls are through the area, the large are not. No divergence, and it pulls right back to resistance inside of those large triggers, works its way down. Strong triggers, there's a tail, you circle it, 859. It looks like it almost makes that area of support. Maybe it didn't there. Same look here. At 932, absolutely. So Thala, you're trading with direction. You're trading with momentum, right? I love it. You're letting that 13.2 lead the way. The one thing that I would see how you jumped in here and jumped out here. I like it. You made money. You took advantage of that momentum. Do you see this pullback right to the mid-band inside of favorable large triggers? This is the one that we just did together. That's your best of the best entry. That's the one, because once you get this pullback, your risk is minimized and your ability to make more money is right there. Yeah. And that's exactly what happens. It's that market moves up and down, right? In your trade, the large crowd gave you momentum. The large crowd gave you absolutely nothing in the way. And that small crowd, and this happens all the time, gives you that little push right back to the best of the best area. And that's the one that's going to let you have virtually no risk and more profit potential. And then you can use Fibonacci to make some targets. Great job, fella. Not bad for day 2. It all starts to click more and more every day. It really does. So let's keep that trend going, guys. Let's take a look at some of the pictures you guys have posted in here. There haven't been a lot today. I know that it's been kind of slow in the market. That happens. We don't control that. We definitely don't control the market. Joel got us going today. One thing Joel does, and I really appreciate this, is Joel loves to put a checklist on his charts. He loves to. Gary does this too. But I'm going to remind you guys, checklist doesn't do much good if you're not using it, right? Odds favorable momentum, no termination conditions. You can't see his entry, but Joel gets in on a pullback to an area of support inside of favorable large triggers and makes a little money. Nice job, Joel. Good looking trade. Buck Blue 05 says this is his best trade yet. And then Thala, there's that same trade that you showed me, right? Everything says up, no termination conditions. Look at this pullback, and I believe it was this one right here, directly to an area of support inside of favorable large triggers. I love this. Isn't this a thing of beauty? $30 ticks on 4 contracts. That's $1,200 worth of success from a high probability trend trade. Buck Blue, great job. Is everybody comfortable with what they're seeing? Odds favorable, no terminations. Because there's no terminations, we take the pullback at an area inside of favorable large triggers. I'm going to steal it. You guys should steal it. Guys, I'm not afraid to steal your pictures. If you're doing something that I want to do, I'm stealing it. Why not? I want to go back and I want to see this every day. I want to study it every day. I want to get good at this stuff. I want to do what Buck Blue does. All right, who's next? Who's got a picture for me? Scrolling. Dun, dun, dun. Gary using a checklist every time. Good termination, he says yes. No termination conditions, absolutely. Odds favorable, he says yes. Area for entry, absolutely. Didn't get a clear market flow signal, he chose not to take it. That's okay. Great chart reading. Ron C. loves momentum. Ron C. is not a high probability trend trader. Ron C. loves the advantage of momentum and direction and takes quick profits. Quick in, quick out, get paid. Guys, what's going to happen is as you grow with the software, you're going to create a plan that works for you. But it all starts with chart reading. It all starts with being able to recognize that momentum, being able to understand. 50-50. Mid-band's riding the triggers there, but it's a 50-50 with a loss of momentum on every chart. Gary, good read. Nice hold. Or nice not getting in. Bobby T, let's see what you did. Bobby T says termination, gives me strong triggers, gives me a perfect pullback to an area of resistance inside of favorable large triggers. Made money. So what was that? That was 14 and 24. 38. This is what I love about you guys. Bobby made $380 in a minute, and he's like, dang it, I left a bunch of money out there. Almost $400 in a minute of his life. And he's mad that he left money on there. Shoot, Bobby, I think that's a great exit. I think that's an absolutely beautiful trade. And this is a trade, once again, guys. That's a high probability. Let's steal it. Let's put it in a spreadsheet. Bobby T, I haven't put you in my spreadsheet in a while. You need to be there. Guys, give me a Y in the room, please. Termination creates a full reversal. Full reversal creates odds favorable. Smalls break through. Give me a Y if you recognize. Ron, you just give me a Y because I asked for one. Everyone else, If you're seeing the process here, look at the checklist. Termination, full reversal, odds favorable, pull back to an area inside of favorable large triggers. Guys, this is the recipe for success. Don't complicate it. Don't fight it. Embrace it. Gary, let's see what you did. Termination creates full reversal, full reversal. You were looking for that HVA, but because your target had already been reached, you canceled the trade. Nice job. 10 km, termination to termination. Smalls are up, larger down, and you take a beautiful continuation of a market that's likely to continue down. 10 km, taking your chart reading and turning it into a little different style trade. Nice job. Once again, smalls above the large are wide. No divergence, beautiful pullback. And 10 km, are you with me in the room? Yeah. I think you're exactly right. You nailed it. Perfect entry, look great. I like it. Risk is established at this point. That lower divergence, and I'm not sure if you recognize this, you were 50-50 on that divergence high, right? The smalls had broken, but the large hadn't cleared it yet. So your entry is rock star right here, without a doubt. But there's no reason to lose quite that much. When this lower divergence and those small triggers really winding down, yeah, great trade though. I remember that one actually. Gary, 50-50, perfect pullback, stop keeps you safe. First target, second divergence prints, you exit. Nice job, Gary. Using momentum, using that termination condition. It's trend trade that violated by small triggers on the 5-1, strong large chart, added at the top, out at divergence. So let's see what you did. You took the short, I remember this one too. You take quick profits, you got a little nervous. Nope, you added on. Termination, smalls are cranking down, large are down, you take the pullback. And then when you get that pivot stop out, smalls on the other side, you take your exit. 10K, nice job. And this one's just textbook trend trade. Beautiful. This one is 2 charts and easy to read. It's going into my spreadsheet as well. NG, great trade. Guys, when I pull up somebody's chart and I say, man, that's a great looking trade, that's a high probability trend trade, steal the picture. Put it in your chart. Build that database. It's too fast, but you still made $260. Nice job, NG. And then here's one of those 50-50 trades, right? The smalls are through, but the large are not. The area has the potential to break, but it hasn't broken. Because there's no divergence, because there's strong triggers, NG, perfect entry creates manageable trades. You take quick profits when that lower divergence, you're out with no harm done. Nice job on this one. So the management that you asked about on the first trade, you were able to execute perfectly on this trade. Nice job. 50-50, no divergence. Yep. Right from the top of the window. 50-50, no divergence. You didn't grab the first one. Chose not to take the second one when those small triggers roll. And they knew where your stop was, and now it's going to the 80. NG, are you ready? Where's your stop with that odds favorable momentum? This is a great lesson, guys. And is this NG or 10K? This is 10K. This is 10K. I'm sorry, I've been saying NG. 10K, my apologies. I know, I got it now. I'm sorry. So let's talk about this. 13.2, odds favorable, yes? 13.2, no termination conditions, right? Isn't that beautiful? Isn't that everything we look for a pullback to an area of support inside of favorable large triggers? It was your trade management. Can you override it? Yeah, so one thing, and I did this a lot when I first started out, is I'd get in the heat of the moment and I'd put a stop where I thought it was safe. And when I go back and look at it, you were just too lazy. It cost you. When I go back and look at it, I would say something clever like, holy crap, my stop was at my entry. With all the rules met for a high probability trend trade, rather than adding on to the contract, I exited from that perfect area. It's a beautiful trade, just a good opportunity, I think. And then this one is flawless. Everything says up. Look at that beautiful entry. Looks like regret not going multiple. Guys, I love it when you regret not making more than $200 in a couple minutes. Just do it 5 times. You're great, right? There's that 50-50 again. And then 10K. What do 3 divergences in the same location tell us? Here's a great lesson. Again, I love it when we have great lessons. Yep. 3 divergences in the same location may terminate a trend. 1, 2, 3. Definitely not an entry. And this is a great lesson too. When you have that 50-50 look, there's your entry, right? Second lower divergence gives you a management opportunity. Great opportunities to make money on that medium probability trade. And then once you get those 3, it's saying, you know what, party's over. And you're like, but I missed the first 2 dances. And it gets you. Great trading, though, and good opportunities for a little bit of learning on these too, which I always love. There's those strong triggers. I love this. This is heads-up trading, isn't it? Odds favorable, nothing in the way. He takes the best entry, but he realizes that it may go down to support, right? He's like, well, it could go. And rather than panicking and getting stopped out of a trade, he says, I'm adding 2 on. This is too nice. And guys, look at this. Price pulls back to support, doesn't it? 10K is using the idea of termination conditions. Price pulls back to support. Every trigger line is strong and above it. This support's likely to hold, isn't it? 10K says, absolutely, let's do this. 3 contracts strong. Out at the first trouble spot. Profits on the second one. And then 10K one more time. There's those 3 divergences. And you're out just below a mid-band at those large triggers. 3 divergences has gotten you twice on this one. And then let me pull up the picture one more time just to throw salt in the wound. Sorry. Oh, and that's the same one. And then Gary, termination condition on the 21, termination condition on the 13. Gonna go manual. I'm a big fan of being in control. And guys, I'll never tell you what to trade, how to manage. I'll help you with some chart reading. But man, I want to be in control because when I write a plan, my plan is very much if-then. If this happens, then I do this. If this prints, then I do that. If this trigger look is like this, then this is how I'm supposed to react. And what it does is it keeps me in control. If I have strong triggers from a good termination condition and no divergence, then I take an entry at an area inside of favorable large triggers. If 2 divergences print and my small triggers are inside and it's not a clear path, well, then I exit the trade. If then. Gary, great trade. And this is very much a termination. That divergence low, the small triggers are very, well, I guess in the moment they might have gotten through a little bit. And then those two divergences, I think you managed this one beautifully, Gary. Yeah, and then no trade beyond, right? Great job. And look at that. Gary's chart reading kept him out of trouble. Yeah, you managed that previous trade, though, beautifully. I mean, just spot on. Great. All right, guys. Crude oil inventories is in 25 minutes. Big push down, right to a termination condition. Termination to termination. 90% of what we do is reading indicators, right? I'm not going short into support with absolutely no trigger lines through it. I'm not going long into resistance with absolutely no trigger lines through it. We go back to if then. If the market continues down, my triggers roll, I get odds favorable, my rules are met, I'll take a short trade. If support ultimately holds, resistance breaks, I get odds favorable, I'll look for a long opportunity. In the meantime, I'm going to wait. I'm going to sit on my hands and wait for something to give me the advantages. Some crazy formula that puts me on the right side of everything. Guys, that's our first hour. I'm going to go get a big drink of water. Might pop a Pop-Tart. Who knows? I'll be back in just a couple minutes. We'll get into the second hour. We'll watch the live market. We'll see what's going on. We'll talk about what we see. If there's questions, if there's things that you want to talk about, guys, don't be shy. I want you to put them in the room. If you've never posted a picture with me, I want you to post a picture in the room. Just tell me what you see. Use that capture software, guys. Fire it up. Left click, drag to the right, and release. Bang that camera icon. And guys, I want you to vandalize a chart. Tell me what you see. That's it. Doesn't have to be a trade. Tell me what you see. 20 words or less. Click copy and pop that thing in the room for me. And let's talk about it. Let's see how you're reading indicators. And it doesn't even have to be in the moment. Here I saw odds favorable momentum. Here I saw a termination condition that created a huge bounce all the way back to the large triggers. Here I see a termination condition that told me don't go short here. Whatever you see. I'll be back in just a few minutes, guys. All right, guys, here we go. Second hour. 1, 2, 3 divergences in the same location. You see it? Guys, look at your 5-1 chart. How's that for indecision? Doesn't this give you a great indication of what really is happening here? Let's make that 13 too. From support to resistance to support to divergence to support to resistance. Guys, they're winding up. Nobody's willing to commit one direction or the other. Next-gen users stay safe in moments like this because I don't have odds favorable momentum and I don't have a clear path. And I'm really just waiting for a breakout. I'm waiting for somebody to let me know that they're in charge, whether it's the buyers, whether it's the sellers. I don't care who wins, guys, because I have a set of rules that allows me to make money either direction. So what a great time to share this picture. I understand where I fit into the equation, guys, and this is something that a lot of people forget, is I don't control the market. Guys, I like to think of it in a term of sharks and remoras. Sharks control the market. Sharks are the big money investors. Sharks are the guys that create tops and bottoms. We know where they may create them because we have Nexgen. Sharks create the momentum. I can identify the momentum that they create because I have these trigger lines. My job is to be the remora. My job is to let this guy do all the work to clear the path, to give the momentum, and then I'm going to jump in and take just a little bit of what he does. Does that make sense? And that means that you have to be patient sometimes, because when the sharks can't figure out what they want to do, it doesn't create opportunities for the remoras. Support to resistance, and now we're trying to push back through. Follow, the longer you're here, you'll realize that I'm kind of artsy-fartsy. Visual is where I come from. Please check pre-trend trade long. Abdulaziz, did you write? Well, there's no rules on the chart. How do I know if you followed your rules if you don't give them? All right, so let's go through and we'll talk about what I see. I see a bad bottom. Abdul, do you recognize it? Price has not reached an area. This isn't a termination condition. This is nothing more than a pivot, right? Do you recognize that? And guys, this is a good lesson for everybody. This is just kind of patterns in the marketplace. So I don't have a termination condition. I'm beyond all of these areas of support, right? All of my trigger lines are below the area. And then my smalls break above right into the mid-band. I do have odds favorable, but this 69.46 area hasn't broken to the upside yet. Are you comfortable with that? So we're on a 50-50 trade, meaning that half of my trigger lines are above and half are not. So when I go to my 5-1 chart, I've already had 2 divergences, 2 slowdowns, which is okay, they happen. And then when you get your final pullback to the area, there's no areas inside of favorable large triggers here at 69.47. Your synthetics are down, your large are up. What about 101? I'm sorry, what's 101? Oh, 1-to-1s. Oh, there they are. Sorry, I got you. Okay, so you did have 1-to-1s at the bottom. I see it. I apologize. I didn't see those in the greens. So you're entering at the 1-to-1s. The smalls are against. The triggers are split. I think that the biggest lesson here, Abdul, and let me show you, and this will help you a little bit. When I have a pivot that kind of comes from nowhere, when I have a pivot that's not coming from a fib, that's not a strong bottom, and I get to that mid-band, this mid-band really begins to act as my first target. And it typically creates a pretty big bounce, and it creates it back to those synthetics. So I like your entry if you're going to take this trade. You're using a 3-minute chart. I'm not sure what it tells you. What it tells me, I've never used a 3-minute chart, but it tells me that everything is down and strong. It seems that it would be difficult to trade with that much conflict. How do you know which one to trust? And then when you get in, I like it, and you take your profits right here, and then this is your third divergence in the same general location. You can't see it because of the picture, but there's your first two right at resistance, and then you get a third divergence right at that same area. And I think this was your exit condition. I think your first profit target is perfect. I think that it was this divergence, this third divergence with the smalls below the large, that said, hey, it's time to go ahead and cut ties. And look at the difference between your trigger lines, how split they are. Does that help a little bit? I like the momentum. I love your entry. Your first target is amazing. That third divergence in the same location, right at a fib with every trigger line below it, said, all right, let's go ahead and get out and wait for things to get clear again. Because of the gap at the 13 range, you stayed in. I think just because it hadn't broken the area yet, it's an area with the potential to break that hasn't broken. And then because of the three divergences, you don't have any areas. The triggers are split. And then this thing is just strong down. You've got a 3-minute market flow chart, which is interesting. I like it. That's my read on it. I think that it's a great entry. Gary, bomb in the education room. No, that's okay. I'm going to clear it out just because it's huge in there and it makes my scrolling a little difficult. It's a range chart, Abdul. It's not a... So what you did is you created a 3-minute chart and you put a 13 range template on it. So when you're building your chart, it should be a range chart. Bar type should be range. Size should be 13. Yours is a minute. But even a 13 range chart, if you're using that 13 range and you're using it the way John Novak teaches it, that was a very, very tough long. Because you're going long from the wrong side of small triggers, right? You're going long against momentum. It was very short-lived. One of the things John will tell you if you're using these range charts, and this is how he taught me as well, is at least be on the correct side of those small triggers. Give yourself a fighting chance. Great job. And then Thala, what Gary was showing is just the, since I deleted it, I'm going to make sure that I do it. The Apex, that prop firm that we talked about yesterday, where you can go through and pass their combine and get a funded account with their money rather than your money. They've extended their 80% off sale. There's another 6 days, 13 hours, 37 minutes, and 52 seconds. He was sharing that for you guys looking for it. Thank you for that, Gary. So what do we see over here, guys? We see support to resistance. Large triggers don't really follow. There's that third divergence, comes back, triggers are split. Waiting for everything to agree at this point. Waiting for these trigger lines to get below. And then maybe we see an opportunity to push lower. Termination condition gave us the breakout, right? Gave us that full reversal. Now I've got smalls above the large. Smalls have broken through the divergence high, but the large have not broken through 40.35 or the divergence high. This is an area with the potential to break, but it hasn't broken yet. Does everybody recognize that? Price reaches the divergence high, no triggers go through, no trades into it. Smalls break through the divergence high, has the potential to break, but hasn't broken yet. And guys, look at the large triggers on 40, 35, 42. Haven't cleared that area yet either. And let's talk about our best trigger look while we're playing around here. Look at how large the window of opportunity is. From 35 to 37, there's a 2-point window on areas that haven't broken. Things that you'll start coming in and thinking. If you take an entry from the top of the window, your stop has to be all the way down here at 33.50. You're looking at about 2.5, 3 points. Pretty normal, but you have to be willing to understand that that may drop lower. 36.50 long only. You like the mid band. 10K will divide, right? It'll divide from the top to the bottom and look for the middle. I like it. There's your window of opportunity, right? May go from the top, may go from the bottom. Guys, you're also in a market that's coming from solid resistance. Straight into support, loss of momentum, can't break the pivot low, and now it's trading into the pivot high. We're starting to see termination conditions stop a market. 50-50 trades after consolidation either work amazing or you get run over instantly. And there's no way of determining which it's going to be. Smalls are through the pivot low. Here's the bottom of my triggers to the top of my triggers. My lowest point of resistance to my highest point of resistance. Let's see if it comes back to it, guys. 69.30 has not broken. It has the potential to break based on that trigger look, but it has not broken yet. Got divergences. Guys, when your triggers get to the other side of this divergence is considered broken. Same way an area is considered broken when the trigger lines get through it. 50-50. Divergence low, right, Gary? Is everybody comfortable with the term 50-50? What we're talking about when we say that? Awesome. You think so, Folger? Folger, all we're saying is on a 50-50 is that the small triggers have made it through an area, but the large have not. And it has nothing to do with your chances of winning. It has everything to do with the trigger look. And since we've been consolidating. So as we come back here, Folger, the smalls have broken through the area with that odds favorable momentum, but the large haven't yet. It's just a reference of where the triggers are. The smalls are through, the large are not. It means that this area has the potential to break, but it hasn't broken yet. Does that make sense? It has nothing to do with your odds of survival if you take the trade. Yeah, it's just a matter of, and you know I have a picture for it. Smalls are through, large are not. It's a 50-50. Not a clear path. And then for me, as a brand new user, guys, when I wasn't in a position to weigh out options yet, when I wasn't in a position to say, okay, this is the strongest trigger look, this is whatever, I would wait for a perfect entry on the 5-1 as a brand new user. That was my approach, which meant that I had to have no divergence, no loss of momentum. It meant that I had to have strong triggers. And it meant that my window of opportunity needed to be small and concise, guys. This is how I felt best about 50-50s. And coming from a termination condition creates even more advantage. See how the window of opportunity has moved? Guys, we didn't get filled, right? And we've got 1 minute. Thank you for that, Jose. 1 minute until crude oil inventories, guys. Let's see if they react to it. They may and they may not. Gary didn't get the pullback. Yep. And now we have news. Let's see what they do. 10:30 crude oil inventories are telling us what they have in reserve. There's a divergence again. There's two divergences on a 50-50. Trading directly into news. Something happened to ES. It went up. Straight to a termination condition. Yep. See all the consolidation, Jose? Is that the same question from yesterday, Thala? I can't read it. I can only see a little part of what's on there. It says how much money is needed for us to trade. If you're trading your money, here's NinjaTrader's margin requirements. Your broker, if it's not NinjaTrader, may be different. Gary, I'm not sure 110 is right for crude. It was $2,000 last time I saw it. Did they change it? Crude oil intraday margin is $2,000, $2,000 per contract. S&P 500 per contract. That's okay. So there's that link for you. But you know what I like is I can just go to Apex, and for $34 a month because of the sale, I can control $50,000 worth of capital, up to 10 micro contracts. There you go, guys. Crude oil reacted, didn't they? This is why we don't trade news. This is why you sit on your hands. Look at this. Odds favorable. Breaking through. Tons of momentum. Pulled right back to support inside of favorable large triggers, didn't it? Odds favorable. Hadn't reached resistance yet. Pulled right back to support inside of favorable large triggers, didn't it? Guys, these patterns repeat themselves every day on every market. You just have to get comfortable to where you can recognize them. Ron, perfect. Waited for the breakout, waited for the momentum, waited for the clear path. Making money. Just simming around, trading the news. Good morning, Safia. That S&P straight up, right? Never gave a pullback. Not our money. I love it when you guys put pictures next to your names. Lets me know what you look like. Some of you are just cars. Some of you are funny little things. It's always great to put a face to the name. I think if you spend enough time in class. So guys, let's just talk about it. Let's chart read. Price reaches resistance. Absolutely no trigger lines break through the area, right? Shoot, Bobby, I don't know. Have you guys not seen me? I'm not afraid to show me. Pretty sure I have a picture of me on Instagram. Maybe. There we go. There's me. Face made for radio, without a doubt. That's my son's new tattoo. Pretty cool, right? You're on the other side of the world? I love it. How cool are my kids? Look at that thing. Haha, he's a rock star. That's you 40 years ago, Gary? I love it. Abdulaziz, after the news, it was so fast, wasn't it? Odds favorable. In a little early. And at the right spot. Money, 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 money. Nice job. Still running that 3-minute, Abdul. Nice job. Gotta wait for that termination condition, don't we? Oh, wow. Is that Dubai? That is on my bucket list. Let's have a momentum talk. Oh, what a great lesson. Careful, I might. Guys, look at this. Odds favorable momentum, right? Do you see it? Odds favorable momentum, that pullback to support works like an absolute champ. Trigger lines return to the large triggers, and we see a loss of momentum, and we have anything can happen triggers. If you took that long, it didn't work out. Do you guys see the difference? John did a whole classroom on momentum, I'm told. Guys, odds favorable momentum is the key. Odds favorable momentum is what puts you in the best position. Once you start giving away that advantage of momentum, that market begins to struggle. And now it pushes all the way back to support. None of my trigger lines have broken through support, so we're in a holding pattern. Is support going to hold or is support going to break? Ronald, do you see how the small triggers return to the large triggers? That's the first thing I look at on the 13-2. Not my best look of momentum. I'm beginning to lose momentum. Does that make sense? You can visually see that momentum is waning. And then if you look at your 5-1, Ron, divergence tells us that we're losing momentum. Small triggers inside of the large triggers tells us that we're losing momentum. So essentially, when you go to that equation, if a trade equals momentum, a clear path, and an entry area, we took out 1/3 of the equation. And now we're into support. And we're waiting to see, is this market going to continue up to the key Fibonacci area? Or is support going to break in? Or are we going to look for opportunity short? Does everyone see that you can't go short yet? The small triggers haven't broken through. which means if you tried this mid-band after 3 divergences, it probably didn't work out. We're waiting just for that moment. Wait to see what's going on here. A higher divergence here, probably going to continue the move up, looking for 70.26. If this market pushes down and breaks through, well, then that may start the free fall down to 69.10. So let's just wait. Let's see what happens. Right now, I don't have an advantage for longs. I'm certainly not going to take a short into support, especially when that pivot isn't from an area. John saying bad top. And Abdul, this was kind of the one that we saw earlier, right? A pivot that doesn't come from a key area. We'll typically go to that mid-band support if it's there. And then very often that market loves to finish the move up to the next key areas from here. So for me, this is a very strong indication that I'm not going to try that short, right? This is nothing else telling me that with a bad top, a 50-50 at the mid-band with that support, it's not my thing. There's that higher divergence, and everything starts pushing up. Let's see if they want to finish the business. Let's put a circle on it right now, or a square, and we'll see if they get there. All we're doing is chart reading right now. I don't have momentum up. I don't have a clear path down. Guys, if I can't go long and I can't go short, what do you suppose my best option is? Go to the kitchen, right? Fix a sandwich. Walk the dog. Write a love letter. That was a big push off a termination condition straight to a key area. And now we're in a holding pattern, right? Guys, FOMC days tend to be less than thrilling because there's a lot of people with a lot at stake waiting to see what these guys are going to say. Waiting to see what the Fed says and then reacting on it. But the flip side of that is after FOMC, the market moves crazy. It's a lot of fun. So guys, there's your crude oil. There's your S&P. This is my cue to go to a lesson because there's not one in the live market, and that's okay. Let's talk window of opportunity. What do you say? Jose, new avatar? Yes, more faces to names. I love it. I think it's pretty cool when you guys do that. All right, guys, I'm going to go through my window of opportunity pictures. So when we're talking about getting into the market, getting into that area where it's likely to continue, what are we talking about? We're talking about an area inside of favorable large triggers. These areas inside of favorable large triggers, guys, give you a bounce spot. It's like throwing a tennis ball up against a wall. No matter how hard you throw that tennis ball into a solid brick wall, it's going to bounce, right? It's going to bounce. And no matter how much you want it to bounce 2 or 3 feet in front of that wall, it's probably not gonna. It has to get to the wall. These areas inside of favorable large triggers act as your bounce point. The reversal bar prints. You can see the red box from the top of the triggers to the bottom of the triggers, and you can see that there is one area inside of favorable large triggers. This becomes the area where the market is likely to continue. The note here says that these one-to-ones are not in the window. They're not inside of favorable large triggers. Guys, this is a perfect short entry. This is a rule number 3 entry. Going to the upside, here's your reversal bar. From the top of the triggers to the bottom of the triggers. From the highest point of support, a mid-band, to the lowest point of support, one-to-ones. This teal box represents the window of opportunity. Once again, Fibonacci support is outside of the window, therefore it's not in the window of opportunity. It's not where the market is likely to continue. Repetition, guys, over and over. Should we see another one? Reversal bar, top of the triggers to the bottom of the triggers, mid-band 1-to-1 line up. Have you guys started a spreadsheet with pictures of great entries? Guys, here's your trade tracking sheet, straight from Nexgen. Just in case you need a copy. Everything you do goes on this page, guys. Every trade you take, win, lose, or draw, goes on that page. And when you start to put them on this page, what you realize is patterns in the market that are making you successful. You're going to realize patterns in yourself that might be keeping you from that success. Everything you do goes in here. I'm looking for, I've got a great picture of how to use that first page, guys. Every trade you take goes in there. What you did well, what you did poorly, how you felt, after effects. Guys, this is how you get the most out of this spreadsheet. There's a two-part process to becoming a confident trader ASAP. Taking pictures of everything that you do. Ronald, can you show me a picture? I can't, hold on, maybe I can click the attachment, hold on. That John just shared above. Let me see what John shared above. John Novak. Oh, that I just shared above. Are you talking about this one that failed? Yep. Are you wondering why on earth would I show you a trade that didn't work? Because the lesson here, Ronald, was nothing more than picking the absolute best of the best spot. Picking that spot where the market is likely to continue. That's the only thing that this lesson was good for. It doesn't give me the information on the 13.2, right? It doesn't tell me if I had a clear path. It doesn't even tell me if I had odds favorable momentum. This picture was really designed for nothing more than to recognize when an area is inside of favorable large triggers. And I did that. You can't tell what the 13.2. Yeah, no, that's okay. Be picky all the time. But when you put the two together, right, now we see the odds favorable momentum. Now we see not reaching the key areas. And then you can put it together as a whole. So I showed a couple pictures only showing the entry. And now that one's going to show you everything, right? That one's going to show you what you're looking for on both charts. I believe that's another one right there. Does that make sense, Ron? I think it's great. Always ask those questions, guys. If there's something that you're wondering about, ask those questions. So using that trade tracking sheet, putting yourself in a position to where you can begin to recognize patterns, patterns in yourself, patterns in the market. From that trade tracking sheet, guys, every time you have a rules met picture, put it in the trend trade, rules 1, rule 2, rule 3. Make sure that you're taking pictures of all those. And then use those client trade examples. Use those pictures that are made available to you. Study them. Guys, I've given my spreadsheet away probably 100 times already. I'm going to give it one more time. This one's going to include the ones that we did today. This is where I tell you, ask yourself, if my goal is to be able to nail this high probability trend trade, doesn't it make sense that I would go through and study the look? Doesn't it make sense? Guys, the S&P has gone full brakes, hasn't it? There's that pivot from a bad top, right? Straight to support. Odds favorable. Did anybody get long at 94? Just curious. I'd love to see a picture if you did. Does it fit the rules? Do I have odds favorable momentum? Do I have no termination conditions? Was I able to identify the one area of support inside of favorable large triggers? Isn't that pretty cool? Happens every day, guys, every market, over and over. All you're focused on initially is entries. All you're focused on in the beginning is making sure that you understand where your best point of entry is. You got it at 94. Claire, when you're doing that, he sent me the picture too. And Thala, if you'll just remind me at the end, I'd love to. So you're going to right click on your account, Claire. And then when you right click on your account, you're going to edit it. And you just, so for commissions, NinjaTrader brokerage, lifetime, if you have a lifetime license, click that. If you lease your NinjaTrader, click that. And what it'll do is it'll factor in your commissions. John, I'm not sure why you replied to Thalia on that one. Oh, it was for Abdul. That's okay. I was like, ah. So Abdul, if you want to go back to the regular 8, there's your picture to help you with that. That's okay. Thala, ignore John Novak. He accidentally replied to yours. And if you'll remind me at the end of class, of course, I would be happy to share my spreadsheet again. Guys, I'll share my spreadsheet every day. But my goal is that you guys build yours. Right? Build your spreadsheet. Put your favorite looks in there. Look at the momentum. Look at the loss of no terminations. Perfect entry. Only 2 divergences, right? And that market continues to go up. And Thala, let's see what you did here. Woo, you are busy. I love it. So you went short? No, you're doing great. So do you know what'll help facilitate learning? I think that this is probably one of the most important things you can do. Long on the box, I have noted. Right here? Okay. So here's the other part of it. Are you ready? So it's a tough love going on sometimes. You're like, Mark, I only want you to look at this one right here because it follows the rules, right? You know this one follows the rules, don't you, Thala? Odds favorable, no termination, pull back to support. You're in a little bit late. That's okay. Brand new. But what I want to know, yeah, is why did you go short here? And why did you go short there? And what made you go short here? And why did you go short again here? And then what made you go long here, but then decide to get back out and then go long again to get stopped out and then decide? And I know that you're messing around and you're having fun and you're getting used to everything, right? And that's totally cool. But if you get into the habit now, and this is probably one of the best habits anybody can ever build, if you get in the habit now of taking the trades that fit the rules, and I realize that you're probably learning how to manipulate the ATM right now, and you're learning how to enter the market and how to exit the market and how to move your stops, and that's totally cool. But once you get through that little learning phase, focus on taking the trades that fit the rules, and more importantly, focus on writing your rules on the chart, because on that last long, the one that you're like, well, Mark, this is the one that I want you to pay attention to. That one was amazing, wasn't it? Yeah, and it helps you, is what I find. People that write their rules on the chart start following their rules a little more. Great triggers, number one look, perfect entry, and you got out. Did you manage this trade correctly? Second divergence into a 1-to-1, move your stop to break even. 8 range triggers still above the large triggers. Adam, you know I can't tell you whether you should or shouldn't have. What does your plan say? Right? But let me lead the witness. Adam, does your plan say that if you have odds favorable momentum, if you have no termination conditions, if you have only 2 divergences, not 3, because we know that 3 divergences in the same area may terminate the trend, right? So if you have 2 divergences and you still have areas inside of favorable large triggers, Adam, couldn't your exit be considered an entry right at a mid-band inside of favorable large triggers? Aren't these 1-to-1s still in the window of opportunity? So this is, remember guys, I said that you're going to have if-then scenarios, right? If this happens, then I do this. So Adam, if I have odds favorable, if I have no terminations, if I'm coming from a termination condition and I get 2 divergences, there is no way I'm putting my stop at an area inside of favorable large triggers. Does that make sense? And especially because you used a confirmation tool. You even had an 8 range that was absolutely screaming in the direction of the trade. So I can't tell you how to trade, but what I can tell you is that this is a rules-based entry, not an exit. Especially when your 8 range confirms and your 13-2, that large crowd says nothing but up. It's a beautiful entry. And this is where I'll recalculate a little bit, Adam. I might take my first profits at those 1-to-1s, get in at 92, get out at 02, make $100, and then I'll still keep my risk on the table unless I get that 3rd divergence. Good, I'm glad that was helpful. Great trade, by the way. A lot of patience today, right? Termination. Wanted to take the pullback to the mid-band, but your rules kept you out. I love that. That is a brick wall of resistance. All right, tank. Why is that sell limit so high up, tank? That was your trade. Is that 85? Pull back to the area of resistance inside of favorable large triggers. Tank, do you see it? Can I ask why 81? Were you looking for the mid-band up here and then just didn't adjust? Guys, remember, when that market's screaming down, you may have to move that order a couple times. Lowest point of resistance inside a favor. It moved too fast. That happens sometimes. It's the right idea, Tank. Everything is the right direction, the right idea, the right trade. Just the wrong spot for it. Trust in those brick walls where things bounce. Great job, though. All right. This was Ronald. Ronald, you circled the right area, right? You knew where you should have been in as opposed to where you got in. If the correct entry was at 90 and you're in all the way up here, you took all your profit potential out, didn't you? And guys, this is normal. Ronald, this is normal. In the beginning, you're going to miss entries, guys. How do you not miss entries? Burn the look of the perfect entry into your brain. Who's gone through all 60 of these pictures? And there's only 60 on the one. Have you gone through and looked at every one of these? Have you studied them? Do you study them every morning before you start trading so that you know exactly what your entry should look like? You should. It'll help. Steven, missed the perfect. Late on the second. Quick profits. In a little bit late right here. Quick profits again. Another one. Nice job. And Steven, I like what you did here. And just like Ronald, guys, if you're in right here, right? If you're in from that area, it's manageable. Your risk is reduced. Your profit potential. The difference, Steven, between being in at, I can't see what it is, 70.01 and being in down here at 90, 92, that's 9 ticks. That's an extra $90 of risk per contract. But that's also, instead of making 80 bucks on this, it's 170. Guys, study your entries. I know it's no fun, right? It's no fun to go back and circle tails and practice and do all these things. Guys, great entries make manageable trades. Getting in at the right spot gives you a better chance for success. All right, Q27. Smalls above the large are wide. They're headed that direction. I'm trying to figure out your entry here. Support. I'm not sure how this one turned out for you. But when your areas begin to get below the large triggers, right? So not inside an area, not inside of favorable large triggers. It's down below, outside of those large triggers on the wrong side. Tail end of momentum. And I want to say, I thought there was a 47 fib there, wasn't there? Maybe from the 21. Guys, this is one of the reasons if you're going to use 8, and that's cool if you're going to use 8. Woo, look at that thing go. Took a small loss. If you're going to use 8, guys, it's okay. Well, that's a 13 native. But mine is termination condition to the tick, Q27. Do you clean out every morning? Because you and I aren't matching. No. So I would encourage you, because I'm an encouraging sort of fella, every morning, Go through this routine every morning. Clean out your cash, clean out your tick. Oop, that was the wrong one. Well, and there's a little picture of an entry too, just to help out. But every morning, Q27, delete. Go through this process. This is my ritual every morning, making sure that I'm set and good. And what this does for you, and I would go ahead and do this one too, since you haven't been doing it. This starts you fresh every morning. It gives you the best of the best, no corrupt data. It's real easy to do. It takes just a minute. Sip your coffee while you do it. But that fib would have paid dividends on that trade, wouldn't it? Did it 3 times yesterday after crashes. Oh, you know what? You had a fib there. It's just behind your target. You had a fib to the tick. Termination condition. I couldn't see it because of your target. Price reached resistance. Absolutely none of your trigger lines broke through. Q27. You willingly forfeited your advantage of a clear path. Does that make sense? That clears it all up. You hoped an area would break and it didn't. I'm glad it was a small loss. Yeah, but it's already hit it, right? So when price reaches an area and absolutely none of the trigger lines break through, this may reverse the market. There's not a clear path. So even though your targets are beneath it, if this fib decides that it's going to reverse the market, yeah, it's just you're going to get run over. I see what you did there. That's rule number 2. I'm a big fan of rule number 2. Gary, no momentum, not a clear path, areas below. Just taking pictures, reminding yourself. Rules keep you safe. I love it. Yeah, Q27, this is why we don't fight those termination conditions. Man, they work. 60% of the time, they work every time, right? Patience is a virtue. We all want the areas to break, right? Or we all want that market to reverse. We want to get to that odds favorable momentum as quickly as we can. Guys, trading is boring if you're doing it right. I draw. I know John listens to reggae music. I've got other people that play video games. Read a book and glance up. John taking a momentum trade, not a high probability trend trade, right? But respecting those termination conditions. Termination, termination, termination. Smalls get down with momentum. That's a different kind of trade. It's a different kind of trade. He's respecting that 13 mid band. The Q27, the same reason that we don't go long into this area is the same reason John Novak took this short. Gary, large triggers have not broken what? Haven't rolled? Yep, it's not your trade, is it? And guys, there's a good lesson. Not every trade is your trade. John Novak wrote the software 27 years ago. He's got more seat time in front of a market recognizing patterns than probably the rest of the room combined. Don't try to trade like John Novak. Don't try to trade like Nexgen Ben. Good morning, Ben. Don't try to trade like somebody that's been doing it longer than you. If you tried to race a Ferrari like Michael Schumacher, you'd be dead in a ditch or into the wall, right? You don't have the skill set yet. We're developing the skill set, guys. We're creating a foundation so that we can read our indicators, so that we can understand potential outcomes based on patterns that repeat themselves every day. The same reason, remember when we did that circle? A bad top pulls back to the mid-band. We did that at 10:35. We drew that rectangle in. 20 minutes later, directly to it. How did we know? Because patterns repeat themselves. Because we can create realistic expectations based on things that we see over and over. I always tell my brother, I used to believe that he had a crystal ball. Because when I was going short right here, he was telling his classroom that this is probably where the market's going based on patterns. And it used to blow my mind. And I would be so upset about losing the short that I would miss the long. And then I'd be so upset about missing the long that I would try the last long directly into resistance with no momentum. There is no ASAP, Ronald. Well, there is ASAP, right? As soon as possible. Do you want to know how to get it? Are you guys ready? I'm going to tell you exactly how to get where you want to be as fast as you want to get there. Post your trades in class. Track them in a spreadsheet. That's it. The recipe's been the same forever, guys. 15 hours a week, I'm available for you to post your trades, to ask your questions, to tell me what you're doing, what you're thinking, what you're seeing. Whoops, wrong one. You guys know I like to share things. Let's do this one. Actually, you know what? I'm going to take a quick little break, and then we're going to talk about that path, Ronald. You guys watch the market, see what it's doing. If your rules are met, take a trade. If they're not, sit on your hands. Take a picture. Show me what you see. I'll be back in about 3 or 4 minutes, and then we're going to end this day strong. But we're going to talk about your path to success, guys. We're going to talk about how you get to where you want to be faster than everybody else. And it's going to be up to you whether or not you want to do it. I'll be back in just a minute. Mic silence, guys. stretch, guys. We're in the last third of class. I'm going to read what John Novak wrote. It takes 9 to 12 months minimum to get the crystal ball. Hang in there. John used to do hours of market replay on 50 times speed. He would run 5 days straight, never once trying to trade. He would just say up, down, may hold, may break, up, may hold, may break, up, down, and just practice his chart reading at high speed. The only way to get more chart reading is to run replay at faster speed and see it over and over and over. You can't watch the live markets and get a week's worth of education and information in 2 to 4 hours, but you can get 2 to 4 hours live. Replay lets you speed it up. And then John and Ben taking the same trade. Ben showing us, and guys, this is a good example of how you should take pictures. Take a picture before. Take a picture during. And then take a picture of the result and make sure there wasn't anything that you missed. Beautiful trade, Ben. Termination conditions, set that up. Rule number 2, chart reading, set that up. Gary, repost. We saw that one. Just waiting, right? Waiting to see what crude does. There's that termination condition once again. This is why we don't go long into termination conditions. Eventually, it may set up a short. Guys, what do you want to talk about? I remember what we're going to talk about. Let's talk about the path. Let's get that crystal ball, right? I'm going to post this one in the room too, guys. I've given you a million things today. I hope you've started collecting them. Whoops. All right, Ronald, are you ready? To minimize your learning curve, post pictures of your trades in class. Every day, guys. Win, lose, or draw. Show of hands. You ready? Let's be honest for a second, everybody. Who's not posted a picture because it's a loser? Who's not posted a picture because you're pretty sure you broke a rule? Man, I've done it. Especially, guys, when your big brother is the guy critiquing, it's even harder to post those. And Ben is absolutely right. You just have to have the repetitions to recognize the moves. Be patient, practice, practice, practice. Guys, I've withheld so much information from this classroom because I thought that it would be embarrassing. But the truth is, I've only met about 3 or 4 of you in my life. And it doesn't really matter whether you think I'm a Yahoo or not. Give me everything, especially the ones that you lose, because we'll look and we'll figure out why. If you win and your rules are wrong, you may have a short-term victory, but long-term failure, guys. If you're just trying to be a simulator millionaire, if you're in there and you're like, oh, you know what? I'll take everything I see and hope for the best. What you're doing is you're developing muscle memory, and that muscle memory is not going to pay dividends later in life, probably. You need feedback every day. We are here to help. I'm the warm fuzzy Novak. My whole goal is to get you where you want to be. If you place a trade and you're messing up, how are you going to know? Well, I think it was a great trade, but I don't want to ask, right? Put it in the room. Let's talk about it. You need someone to tell you what you did right or wrong. This is part of the educational magic. Can I go over Nexgen Ben's trade above? It's a momentum style entry. I'll go over it in a second. Guys, there's an outline for education. It's the exact same outline that we just looked at. Your path to becoming a successful trader, ASAP. Use that spreadsheet. Use the checklist, guys. Go through. Put everything in class. Annotate. Hey, Falcon, good morning. Creating a database of rules for you to study. right? Going through, using that spreadsheet. What's it going to look like over and over to get you into the trade? And guys, that's it. All you're doing is you're defining entries. If you go through that simple process, post your pictures in class, annotate your charts, put them in your spreadsheet, you're going to get to where you want to be. I put that in the room. You can read it in its entirety if you want. Claire, little late, doing too much at your desk. Whoops. Claire, I think you gave me the wrong one. You're setting up your commissions. Falcon, let's see what you did. Let me open this up here. So Falcon, one thing that I need you to do, and this is going to help me a lot if you don't mind, is tell me your rules. What chart are you using for entry? Why did the Renko 13.2 away more than a bar and trigger price didn't go back up? So you're entering on a 13.2? So you're entering against momentum, you're entering against direction, and you're just hoping that that little blue fib holds, right? If I were writing rules on your chart, would it sound something like that? Yeah. Why didn't it hold? Because the sellers pushed it down. That's it. You're fighting direction and trend. And there was a termination condition on the large ES is coming directly from a fib, Falcon. So one thing that when I was trading micros, what I did is on my large charts, I looked at the full contract, the ES micro, and the only chart that I used for MES was entry. So I was taking my analysis because the reality is they're two very different markets, right? The MES and the ES, even though they're both S&P, they're completely different markets. So if you look at Ben's trade, you'll see on the big ES, oh, if I can find it, on the big S&P, there was a textbook termination condition, and that termination condition ended up reversing the market. Does that make sense, Falcon? So I see what you were doing. Can I take it a step further? If you're going to use the 13.2 for entry, don't you have a 50-50 on the 21? That's going to be your large chart. That's going to be the one that makes the determination. So Falcon, you've got a 50-50 with weak triggers on the 21. This isn't telling you that this area is likely to hold. This is telling you that it has kind of the potential to hold, but your 13.2 says that we have momentum coming down. And you're coming straight from the one-to-ones. Cool. I hope that helped a little bit. I like the idea behind it, but even on the MES, you had that termination condition saying that the party was probably over. Gary, waiting for a breakout. Paul. Yeah, you totally overthought it. So what you did is you kind of took a lesson and misused it just a little bit, and that's okay. You got a reversal bar, right? But signals not from areas, Paul, we don't worry about. It's just a signal. It's just a reversal. It's just a shift. It was that shift that got you back. If this reversal bar was coming from resistance or even from an outer band, yeah, it's kind of from space. So right idea, wrong execution. Silly Paul. If we were in Texas, we'd call you Pablo. Just throwing that out there. Fun fact. Claire, let's see what you did. All right, Safia, are you with me? Because this is Ben's trade too. And you were curious about it? Claire and Ben are in cahoots with John Novak, it would seem. But everything starts with a great termination condition. Everything starts. Look at that. Isn't that textbook? Isn't that everything that we teach you to look for in a termination condition? And it wasn't just on the 13.2. It was every chart that Claire owns. So when this termination condition on every chart comes through, and your small triggers on the 5-1 start screaming down with momentum from that termination condition, they get to the right side of all the large triggers, and then price breaks through a fib and snaps back to it without divergence. It's nothing more than a momentum style trade, Safia. But there's something that you have to think about. This looks awesome, right? And these guys look brilliant because of their ability to read charts. At the time of entry, what's the direction on your large chart? At the time of entry, what are your large triggers doing on the large chart? At the time of entry, where are your small triggers in relationship to the large on the large chart? Do you see the challenges? Look at your triggers going up. Look at your triggers going up. So Safia, while this is an amazing trade, this is not a beginner's trade because you've got to go against every instinct that you're creating in the beginning. You've got to not fight, or you've got to be willing to fight the direction on the 13.2. You've got to be willing to fight the direction on the 5-1. You've got to be willing to fight those trigger lines, the momentum, everything. And it's putting an enormous amount of faith in a termination condition that spans 3 or 4 charts wide. Does that make sense, Safia? I love this trade. I don't take this trade because I tend to abuse the rules on it, and I know that I do. That's the pattern that I've learned. But if you're curious and you want to study it more, never. Here it is right here. Yeah, it's very interesting. And guys, it's cool to study things. But just like anything else, make sure that you get the reps on it. Yeah, but there's the rules to it. And if you look at it, great top on all charts. This looks exactly the same, doesn't it? This was December 22 contract on the S&P, which means this was probably October or November. Doesn't that look exactly the same? And is even 36.48, not 47. Terminations on every chart. Breaks, snaps, goes. I love it when these pictures from a year ago look exactly like this picture from today. It just reinforces the idea that it's patterns that we're trading, guys. It's patterns that we're trading. Gary, it's beyond a lot of people's skill set, right? What's the significance of the 1-to-1 in this look? Which 1-to-1? Paul? Right here? On the 5-1, Paul? Actually, that 1-to-1 hadn't started printing yet at the time of entry, did it? If you look at it. Let me get one that I can zoom. That 1-to-1 hadn't even started printing yet. I love a 1-to-1 at the entry. But no, at that point, you're already in. But if I can get a fib and a 1-to-1 and a mid-band right at those small triggers where everything's coming together, the more areas, the better for me, for sure. And guys, remember that your skill set grows from a foundation. Your skill set starts at day one. It starts recognizing momentum. It starts recognizing termination conditions. Let's go to the rules. Strong 13-2 trigger lines must be true. Enter on pullback at fibs, mid-bands, 1-to-1s below the 13-2 triggers. So nope. It gives you the option, Paul. This one just kind of happens to have everything. And John says it was the 13 range market flow chart that gave him the giddy up. And then Paul, there's your reversal bar coming from the outer band. Oop, my voice is cracking. Do you see it? So it's a termination, it's a termination, it's a termination, and then it's that reversal bar from the outer band. So Paul, that kind of goes back to yours, where that reversal bar didn't come from the outer band yet. Yeah, pretty cool, right? Everybody's got their own comfort level. Those trades scare the ever-loving bejesus out of me, and I know how to take them, and I know how to read them, and I understand every concept behind them. But I find that when I start looking at them, it becomes a little more challenging for me. All the way down to support, right? Not looking for that short because we reached the termination condition. Guys, the S&P, some of you are brand new and you're like, oh my gosh, this market, I can't do anything. Well, sometimes that's the case. Termination all the way to support in the mid-band, large triggers don't follow. Retests, now 745. I've got two divergences from resistance. Look at the different reaction in the trigger lines when that area is reached. The first one's a little bit of overrun. It comes back and retests it. And now we're starting to push down, right? That's a good one. No, it didn't. It was at 10 though, Paul. The high impact news, no, there wasn't. What news did you have at 11? I didn't have any at 11. Okay. I was like, ah. Yeah, 2 p.m. Eastern. I got you. That's FOMC. That should be fun to watch. John, a little Tom Petty. Man, Paul, one thing I do so I don't screw that up is under filters, or no, because my clock is set in Eastern, it helps. And then Ben, you used a 13.2. I mean, everything says hit the brakes, right? 13.2 market flow. That's interesting. I haven't seen that one used yet. Would you guys agree that these trades come from an ability to read charts? That's really the biggest thing that I want you guys to take out of these classrooms is that your ability to read charts is what creates opportunity, guys. And you're establishing that ability in the beginning through building a foundation, through asking a million questions, posting a million pictures, and understanding expectations based on patterns. Guys, if I have two divergences at resistance, everything has held, it's been retested, Look at this picture right here, guys. I say guys a lot. I'm going to stop that. Let's go to termination conditions. Resistance is reached, pushes back to support in the mid-band, gets tested again. Look at the trigger lines, and then it reverses. Resistance holds straight to the mid-band, almost exactly the same. Retests, full reversal. Isn't that crazy? Couldn't we say that that's a pattern? Still not a trade yet. Not a trade yet. Why? Because rules aren't met. I've got support with absolutely no triggers through. Can we start the if-then game? Exactly. We start playing the if-then game. What has to happen? I have to have momentum, I have to have a clear path, and I have to have an entry. And guys, the difference between chart reading and trading is day and night. You're going to read a million things. You're going to start to pull information out of the market that you never thought possible. You're going to understand expectations based on patterns. You're going to create all these opportunities. And that's it. You're going to find a dark hole of trades that do not have rules. So you go from know nothing, see nothing, to see everything, and then you bring it back in. It always comes back to the rules, guys. Either rules met or rules not met. So crude's in a holding pattern. S&P is in a holding pattern. You guys want to see the learning curve? Oh man, John, get out of my head. That was funny. John Novak and I are synced up. Experience versus time, right? In the beginning, it looks like fun. This is awesome. I'm going to be a day trader. I love this pick too, because if you've been with Nexgen or if you've traded for more than 3 months, you know how true this is. Looks like a blast. This is great. I'm going to do wonderful things. And then you go, holy smokes, this is hard. I'm actually going to have to study if I want to do this well. So you start studying and you're not sure what you're doing, but you see the potential and you keep on doing it. And you're like, now I understand it completely. And guys, this is about 30 days in. I know everything I need to know. Have you met me? I'm awesome. This is when people go live too soon. This is when I went live too soon. I'll admit it. After about 30 days, I had a $5,000 account that I'd put together. Oh, we know. And it took me 22 trades to lose all 5,000. 22 trades in 2 days to lose all $5,000 because I had absolutely no idea. I had no plan. I had no rules. I had no pictures. I'd never participated in class. I just thought since my last name was Novak, I just assumed I felt entitled to win. It didn't work out. And then I had this, well, you know what? I probably suck so bad I should just quit day trading. But I'm not a quitter. I'm stubborn. And I said, if I'm really going to get good at this, I'm going to formulate a plan. I'm going to start participating in class and I'm going to fill out that spreadsheet. Guys, I can tell you that when I finally took that kick in the teeth, let me pull up my spreadsheet. This goes down to 279, I think, 272. I filled this out 3 times over before I went live again. I filled it with pictures and comments 3 times over before I went live again. And then where it actually makes sense, guys, this is where you start getting good at reading charts. And then you're like, wow, I knew that was going to happen. That's that crystal ball right there. And then it's consistency. And Nexgen Ben is right. You got to learn the trades here and then develop your trade plan. If all you ever do is the high probability trend trade, you'll be able to quit your job forever. I agree 100%. I agree 100%. Joel, there you go. That's you at the now I get it. I like it. It's nice when you can identify where you're at on it, right? But what Nexgen Ben isn't telling you is that if all you do is a high probability trend trade, if all you do is wait for these rules to be met, 90% of what you do is chart reading and 10% of what you do is trading. Can you do that? Who can sit on their hands? John, do you have that copy pasted? If Elon Musk told you that he'd pay you $1 million a year and all you had to do is sit in a room and click the mouse 2 or 3 times every 2 or 3 hours, it's worth $1 million. Everybody in this room would take that job, right? Everybody in this room would probably be fired at the end of the first week. That's it. They're all based on high probability trend trade looks. And then John says this is the money trade. John has established in pictures and rules what his favorite look is. All 4 trigger lines in the high momentum phase agreed with the long. Strong momentum phase on the large on the 13.2, on the 5.1, on the 8 range. All triggers agreed with the trade. This is what Ben would call obvious, right? Everything's on the right side of everything. All the momentum says yes. He's going to get you on a technicality. The fibs updated and moved up. But you're right, except for the termination condition. And everything is a matter of chart reading, right? If I have 75 things that say up and I have 1 that says down, it may be worth it to me to take that trade. Isn't it all about advantages? In decision, everything says up, everything says up, everything says up, everything says up. And he went. Gary, it's not about the confirmation. I think you're missing the message. Every chart agrees. Every chart agrees. Every chart has momentum. Every chart is up. Every chart is strong. There's not even an entry on there. Yep. Let me take a picture of this and show you guys. And this will just kind of reinforce exactly what Ben just said. Look at the momentum here. Look at the momentum here. Visually, it's pretty easy to see, isn't it? I know you guys are going to think that this is strange, but I have a picture. Don't I always have a picture? Guys, I've got thousands and thousands of pictures. Anything can happen triggers, not the advantage. Odds favorable momentum, look at the market continue. Anything can happen, the market turns. Odds favorable, the market continues. No agreement, the market bounces sideways. Anything can happen, it reverses. Odds favorable, it continues. So this is where you ask yourself, brand new users, write it in Sharpie on a big piece of paper. Every trade I take will start with odds favorable momentum and see how that works out. I can tell you guys that I could have eliminated an awful lot of losers from my life if the only thing that I relied on was odds favorable momentum. If the only precursor I had was that best of the best trigger look, I could have taken a lot of losers out. And then that just kind of spirals. When I take that same momentum and there's nothing in the way, oh my gosh, it just gets better. And then I take that momentum and there's nothing in the way and I'm entering at a bounce point. Holy smokes, the world is my oyster. Guys, I've never had anybody in the history of me teaching this class follow this checklist that I'm putting in the room for you right now. Follow it to the letter and not win more than they lose. Never had it happen. I've had people back tested over months, over 500 trades, and the end result is always typically about 80 to 90% winners. Your job is to do the same thing. Your job is to go back and back test it so that you can trust it. Your job is to take every high probability trend trade so that you can establish repetition and comfort. It takes a little bit of time. It's worth it. Ask anybody that's done it. It's worth it. You just got to be able to fight your boredom, your desire to make something happen. My most expensive accessory is hope. It's like that scene in Pulp Fiction. That's pride. Pride doesn't do anything good. All right, guys, we got about 10 minutes. What do you want to talk about? I've gone full soapbox on the path. The cool thing is all you have to do is follow the plan. The plan's put there. You've got the best software in the world. You have live education 15 hours every week. You have the ability to go back and replay it. You've got concrete rules that have been proven to win more than they lose. The only thing you have to do is practice at this point. You're welcome. And then when you practice, show me what you did. Let's talk about it. Sometimes you don't realize you're trading in determination conditions. Sometimes you don't realize the momentum wasn't as good. Sometimes you miss those 3 divergences on the smaller chart. Sometimes you were looking to enter at the highest point of resistance instead of the lowest point, and you needed that little nudge to get you back in the game, right? Guys, that's what I'm here for. If you don't ask questions, I'm going to live in a van down by the river. You are my job security. Keep asking questions. I'm going to go mic silence because I'm rambling and I'm about to get a Skype from John saying, just shut up and let them talk. Back in a second, guys. Just if you have a question, post it in the room. I'm going to hit mute. I'm going to sign off on the YouTube.